Hello there, fourth dimension trading time. Shaun here. This is the update on grains, sugar, and cotton. So we'll begin with a bit of fundamental information. There was some rain for Argentina, but not a great deal really. And the forecast, especially for the north, is still too dry and hot. And also, the planting progress for soybeans and corn is actually quite a long way behind normal schedules. More negative news on sugar in that Brazil extended its tax break on gasoline, and that encourages more sugar production. And then lower oil prices starting to make a move into polyester, which makes polyester more competitive to cotton. So a minor negative there. We'll start with the Argentina weather, which really is the key at the moment. So this is the 15-day forecast of the percentage of normal rain over that 15-day period. And you see that generally percentages are considerably below what they normally are. And this is going backwards 15 days, and this shows us the percentage of normal rain that has actually happened. So again, in the south, there's been plenty of rain, but it's in the middle and in the north where it still remains below normal. In terms of the highlights of the week, soybeans did hold its first support pretty much perfectly early in the week. Meal broke up on Friday. That has been the strongest of the complex. Corn the other way came down and attacked support, and sugar broke its key level and just extended lower. And cotton pretty quiet, but it did edge a little bit higher on the week. So we'll begin with the daily chart on soybeans. We see how we held that 1464 and a quarter point on Thursday. It takes a daily close below there to put us back in sideways. On the upside, we didn't manage a daily close above that 1524 and a quarter point, which means that in order to restart the uptrend, we need a daily close above 1537 and a half, and then that would leave no resistance. Weekly chart just shows that we're sort of hovering around that monthly level. And on the monthly chart itself, if we were to break up, the third deviation up is a long way away at 1703 and a quarter. We're above the average at 1437. On to meal. Argentina is affecting meal because it affects the crush, which means less soy meal around, and it broke up on Friday. So now the breakout zone below is at 476.1 to 71.6. So 71.6 is a key support. In terms of it being a false break up, we need a daily close below 458.2, and then we can rotate back, and then we have that big monthly level at 437.70. Weekly chart just shows that we went to the first deviation down and a new breakout higher. And on the monthly chart, again, if we're looking for upside targets, the third deviation up is at 553.3, way above the average at 428.1. Bean oil's been pretty quiet, did retreat lower through the week, but we have formed a new resistance at 66.73. So daily close above there would be positive and target 72.34. Nearest support 60.03, but the key level 58.04. So a daily close below there would turn the major trend down. Weekly chart shows that it was pretty quiet, and on the monthly, limit of range 77.76 and then 52.78. On to corn. Corn failed at that 684 and a half level right at the beginning of the week, and then extended lower. 664 is a weekly resistance, which is not too far away. We're going to need a daily close below 635 in order to turn the trend down and target 564 and a half. It's going to take a daily close above 702 to turn the trend up. Weekly chart shows that it's pretty quiet really, and then on the monthly, We are below the average at 672.5. Limit of range 489 and 3/4, 758.5. European corn also failed at its first resistance before Christmas. The key level above 304.40, so it needs a daily close above there to turn this thing bullish. On the downside, 281 and then another major level at 267 and 3/4. On to sugar, very poor week for sugar. Remember, we did not break out higher before Christmas. I explained why on that pattern. And now what we've done is taken out the 1922 points. So 1922 to 31 is a key resistance zone. Ideally, we do not close back above that level. On the downside, with the major trend now down, nothing until 1764. Weekly chart shows that it pretty much almost got to the third deviation down on the week. And then on the monthly, we do have to reference the limit of range for the month, which is above the nearest support, and that lies at 1811. It's worth remembering that the funds are still very, very long this market. On to London sugar, also pretty poor. That weekly support has moved to the top at 579.60, so we just had minor supports below. Key level above 552.8. Nothing major below until 487.70. Finally, cotton, pretty much unchanged on the week, just a little bit higher. We're stuck in sideways, 77.50 below. Take that out, it's negative. And on the upside, we've got to take out that zone at 89.65 to 92. Weekly chart shows that it's pretty quiet. And on the monthly, limit of range above 97.24, below 54.14. So in conclusion, beans did reach its next major upside target, and it's now going to take a daily close above 1537.50 to leave no resistance. A daily close below 1465.25 puts us back in sideways. Meal has broken up and has no resistance. The third deviation up is at 553.3. Your key support, 471.6. A daily close below 458.20 puts us back in sideways. Bean oil in sideways, bounded by 66.73 and 58.04. Daily close below that point would create another downward move and target 51.25. Corn trend sideways, daily close below 635 turns the trend down. Daily close above 702 turns it up. Sugar trend is down. Next downside target is at 1811, which is the third deviation, and your key resistance 1922 to 31. Cotton trend is sideways. Daily close above 89.92 leaves resistance distant, and a daily close below 77.50 turns the trend down and targets 68.56. Okay, thank you.